All right, for this video, I wanted to talk about the principal residence exclusion and how to report your 1099-S on your tax return. So I've got a couple of pieces in front of us here. I've got one slide covering some of the background rules on this principal residence exclusion, and then the fact pattern that we're going to be working with. And then, of course, I do have a sample 1099-S here. This is for the 2022 calendar year. And then we've got a sample tax return for our taxpayer here, John Q. taxpayer. And so we'll look at the return, Schedule D 8949, and see how all this comes together. So if we go back to the slide here, some background on this 1099-S. So 1099-S's are filed when you sell real property in the United States. So if there's a broker, a lawyer, whoever is basically concluding the transaction on behalf of the buyer and the seller, they're responsible for preparing the 1099-S and sending it to not only the IRS, but a copy is provided to the seller, right? So this applies to all real estate, right? So it could be single-family residential homes, commercial property, it's a vacation home, investment property, your principal residence, whatever it might be. If it's real property, the 1099-S is generally filed. So now, the principal residence exclusion, we find these rules in Section 121 of the Internal Revenue Code. So if you're an individual and you own real property and you use it as a principal residence, you might be able to exclude either all or a portion of the capital gain on the sale of the house, right? Now, in order to qualify, the property does have to be owned and used by you as your principal residence for periods aggregating 2 years or more during the 5-year period ending on the date of sale. So what does that mean? Basically, you look back 5 years and ask yourself, okay, did I use this property as my principal residence, my main home, and at least 2 years out of that 5? Now, it doesn't mean you need to own it all 5, right? If you buy a property and you use it as your home for 2 years and then you sell it, that still counts, right? Because you owned it for at least 2 years, you lived in it for 2 years, so you can sell it and still get the principal residence exclusion. The 5-year period just gives you a little bit more of a buffer because you can have circumstances where you're living in one property, you might move away temporarily, then you come back. And so the 5-year window gives you a little more opportunity to be able to qualify for this exclusion. Now, the amount of gain that is excluded is going to be $250,000 per person, right, per year. But you can only use the exclusion once every few years, right? So it's important to note that you can't just constantly use this back to back. There is a little bit of a window there in order to be able to take this. So the exclusion does double up to $500K if you're a married couple filing a joint return. And so this exclusion has to be reported on your tax return, right? There's special reporting that needs to be done to indicate that you qualify for this. So the sale is going to be reported on the 8949, and eventually it's flowing through to Schedule D. And then there is an adjustment code that we enter, code H, in column F to indicate how much of the exclusion we're taking, and then the reason being that this is our main home, so we're claiming the principal residence exclusion. All right, so let's look at the fact pattern here, and then we'll go look at the 1099-S and then the return itself. So in our fact pattern here, we have John Q. taxpayer. He's a single filer in Florida. He bought his house on February 1st, 2019, and he used the home as his principal residence, so he didn't have another apartment, he didn't have another house. He just lived in this home for the entire period leading up to the sale date, June 27, 2022. Now, when John bought the house in February, he purchased it for $300,000. He has some closing fees associated with the purchase, so let's say it's $3,450. And the reason why all these other charges are going to be important is because this adds to your cost basis, right? So John gets to add the closing cost to his cost basis. And in 2020, so the year after purchase, he spent $15,000 in capital improvements to upgrade his kitchen, right? Remember, capital improvements, so significant expenditures to add additions or improve the home, you can add those to your cost basis. Now, John sold the property in 2022, right? And the total sale price was $650K. And on the closing documents, right, so on the HUD statement, he pulls together elements that he can use to add to his cost basis, and so those amounts were commissions and legal fees of $13,000. So all of that gets added to his cost basis. So when he looks at his overall net capital gain here, the gain is going to be $318,550, right? And so that is $650,000 in gross selling price. It's a $300K from the original purchase price plus these closing fees, plus the $15K upgrade to the kitchen, plus the legal and commissions of $13K. So he adds all those extra costs up, and his total cost basis is $331,550. So when you subtract the two, that's his net gain of $318,550. All right, so now let's have a look at the 1099-S and then the tax return itself. So the 1099-S, relatively straightforward form, so it contains a couple of key points here, right? So the first one is the date of closing, right? So what's the sale date for the property, the gross proceeds, so the selling price, right, that the buyer and the seller agreed upon, what calendar year it applies to, so this is 2022, and then the address of the property that's sold, right? So not necessarily the mailing address of the transferor, right? Transferor is the seller here in this case, so John Q. taxpayer. So the filer of this is going to be the broker, the law firm, right? It's not going to be necessarily the buyer or the seller that's doing this, but the buyer does get a copy, and again, the IRS gets a copy of this as well, which is why it's so important to report this on your tax return, even in cases where you might have sold the property for a loss. Remember, the sale of your personal use home, even if it's at a loss, it's not a capital loss, right? You can't deduct capital losses on the sale of personal use assets. But nevertheless, it should still be reported because the IRS isn't going to know that you took a loss on the home, right? All they're going to get is this form with the gross proceeds amount, so it's your obligation to tell them, what the net capital gain or net loss is that you realize on the property. Okay, so you got the 1099-S. And then if we jump over to the tax return, we're going to start with Form 8949. So it is the sale of a long-term asset, right? We held the house for more than 1 year, more than that even, because we needed to hold it for at least 2 in order to qualify for the exclusion. So we have a long-term disposition, and it's a long-term transaction not reported on 1099-B. So it is a 1099 reporting, right? But it's 1099-S, not 1099-B from a broker. So for that reason, we would indicate box F here, long-term, not on 1099-B. And so in the description, we put main home. That's sufficient. You could put the actual street address, but just it is really important to include main home here just to indicate that this is not simply another address that was used as a vacation home or an investment property. It is your main home for which you are claiming the principal residence exclusion. So then we have the date acquired, date sold, the total sale price of the property there, and then again our adjusted cost basis. So remember, that's the purchase price of the home, all the closing fees, settlement charges, and then the same thing, the selling expenses on the sale of the property. And then code H, so code H means sale of your main home for which you're claiming the principal residence exclusion. And then in column G, we have the adjustment. Remember, this is John is a single filer, so he gets $250,000. So we have a $250,000 exclusion, and then the net amount left over, $68,550. So in this fact pattern here for John, only $68,550 of the total gain is what's subject to tax. Now, in some cases, a lot of taxpayers will the gain or loss will just be zero because the exclusion might wipe out the whole amount. But in John's case here, he did have some significant improvement or appreciation in the value of the home. So he did sell it for a very nice gain. And he wasn't able to eliminate all of it, right? He still gets the 250s, but there is some left over that is going to be subject to the long-term capital gains tax rates. Now, I also want to highlight the nice thing about the tax preparation software we use is it provides us a lot of additional worksheets that can be quite helpful. Now, these aren't filed with the IRS. You can see here, this is a primary residence gain exclusion computation worksheet, but it does indicate, keep for our records, right? So none of this is actually sent to the IRS, but these type of worksheets are very helpful if you need to kind of figure out what your adjusted cost basis might be in the property. So in John's example here, right, we have, the purchase price of the home when he initially bought it in February 2019, and then they ask us some questions and input some information about items that will adjust the cost basis up or down on the property, right? So we can see some of the closing costs, right? The survey fees, the title insurance, some transfer taxes. Line 6 here, we entered the cost of additions and improvements, right? So we did have some capital improvements, right? We redid that whole kitchen. And so we get an adjusted cost basis. And then ultimately at the end here, we're going to get our adjusted taxable gain, right? So there we can see our $68,550 amount. And that is, of course, what's also being reported up on the 8949. And then ultimately it's being reported again on Schedule D. So in Schedule D, in the long-term section, there we have our amounts coming through from 8949 related to the sale of our principal residence. All right, so that covers it for this video. I hope that was helpful. If you have any questions, please leave me a comment below. And as always, I look forward to seeing you again on the next videos. Thank you.